Hello, hello. Welcome to another 10K Let's Play analysis. My name is Sage Seeds Cap, and my goal is to make everyone a financial sage by walking through annual reports together. Let's dive in so that your wisdom can blossom. Today, I've pulled up Intel Corporation. I've also tried boosting the zoom on this. I know that some of the exact numbers can sometimes be difficult to see, especially with all the eyeballs out there. We'll try to be better at zoom, like highlighting specific numbers when maybe they're particularly interesting to look at. If you don't see the numbers, or if you're just listening and not watching, you're treating this like a podcast even, I think that should be very okay in almost all circumstances. And the numbers are important, but what's more important is the story behind the numbers, and I'm going to be saying that story out loud. Here's that beautiful Intel logo. I think lots of us have seen it at least once before. Maybe not, that's fine. If not, go check out your computer, and I'm willing to bet there's a good chance it's going to be a sticker with this on it somewhere on the computer. Yeah, let's just go directly to our usual opening move. Quick reminder, the usual opening move is to ignore the first 7 parts of the annual report and go straight to what is called the item 8. Now, in this case, item 8 for Intel Corporation starts on page 73 and continues for quite a while, all the way until basically page 124, and it almost always will be the bulk of the report will be the item 8. I like to refer to the item 8 as the numbers, and the other sections, of which there are about 10, those different types of words. They're really comprised of different short, they're not essays, they're more paragraphs, but you can basically think of them as essays. You can figure out through the financial reporting, which is standardized for a lot of reasons, we can figure out what is actually different or unique or changing, most importantly, changing. In a lot of ways, financial analysis is really understanding how the financial commitments of a business are changing. It's not about understanding the commitments alone. It's really about the dynamicism of it. The opening move, in my mind, always consists of looking at the 3 major financial statements. These are the things you'll find in accounting classes very often. They are the statement of income, or the income statement, which is always prepared from the company to various tax authorities. In the case of Intel being a Delaware, United States company, their main audience for the statement of income are the Internal Revenue Service of the United States and Delaware. Then we look at the balance sheets. This is a snapshot of the resources of the company, and it happens one day a year. The company gets to choose what day. But what's interesting is that we'll look at the latest day snapshot and compare it to a snapshot of roughly 1 year prior. The difference between those 2 snapshots will let us zoom out of the day-to-day and see if there are large trends or shifts in how the company's resources are made up. Is there more cash? Is there less cash? Is there more liabilities? Is there less liabilities? And we'll talk about all the specifics when we get to it. And then finally, we'll look at the statement of cash flows, which is what we would think about as what the company's bank accounts look like. So I like to imagine that the chief financial officer's office will look at the statement of cash flows if they want to know what's in their bank accounts. That's as opposed to the income statement, which looks like it would match up with their bank accounts, but really is just a presentation for tax authorities. Okay, consolidated statement of income. We have 3 years. Net revenue decreasing. We never like to see decreasing revenue, and maybe a bit surprising. I don't know. It's kind of a substantial decrease, to be honest. 16 million or billion. Sorry, 16 billion, because these are in millions. And yeah, operating income dipped by basically that entire 16 billion. And so potential thing to follow up on is when revenue decreases, especially by a substantial number like 16 billion, you would hope that that could be tied in with decreasing costs. According to this, none of the cost of sales or anything that's in addition to that, selling general and administrative is what we call that, decreased at all. In fact, some of it kind of continued to slightly tip up on trend, at least. It's not like accelerating, but it's continued to tick up regardless of the net revenue going down. We would hope, really hope, that if revenue is decreasing, you have the ability to at least not spend the same amount of money for less revenue. There's something going on there. Moving on to the balance sheet, let's compare one day from the latest reporting period of this report to roughly a year earlier. Actually, that's Christmas Day and New Year's Eve. People are working on holidays at Intel, apparently. Maybe we should remind them to take a break. Nothing too crazy in any of the current assets. Everything is fairly stable on the current liability side, and debt-wise, they're taking out some debt this year, but nothing crazy. Looking at retained earnings, almost all of the money they did make, but almost all of it went directly to retained earnings, which is what is available left for investors after paying all the other stakeholders. I guess it's a clean trip now from their bottom line on the income statement to investors' pockets or people that have invested in them in the past being able to receive it. Let's go to the statement of cash flows now. I mentioned how this is what the CFO's office would be looking at to understand what's in their bank accounts. Said differently, this beginning here is net income as exactly as mentioned in the income statement. Everything else on the statement is an adjustment in order to make net income as presented for tax purposes match up with what is actually in the bank accounts. So all of these are adjustments that, for whatever reason, they were able to change because of tax codes and stuff. But now, in order to actually keep track of their money, they just want to see what the real values are here. A reminder to us again is we're talking about less than half the net income with absolutely no changes on the cost side. Like what happened in which they did the exact same things or similar and then just revenue disappeared? Based on the cash flow, nothing is seeming like an obvious change. And so, for example, their depreciation, sure, it's larger than last year and the year prior, but this is all within a plus or minus of some reasonable amount of percentage points. It's not like the business is trending towards making depreciation significantly higher or smaller as a piece of their business. It's strange how stable everything looks here when, if we compare all these numbers to revenue, everything looks like it should be very different with that change to revenue. So the only question coming from the opening move was, revenue just casually got chopped by about 20%. And other than the literal number of revenue decreasing, nothing else in any of the three core financial statements was congruent with that. Said differently, the business would have looked like nothing had changed if we looked at 100 lines, and then that one line, the very top line of the income statement, revenue, was dramatically different. I don't get how that happens yet. Definitely is something that needs to be happening in order to explain that. And so in order to figure out the question of where's the missing revenue, where did that go, we're going to look at the notes to the financial statements. At the very beginning, we saw how there's like almost 50 pages in this item 8. The bulk of that is actually not the standard reports. The company is able to include notes to these standard reports about whatever it is that they want, and they get to make the notes, essentially be creative with it. Whatever they think is important, they get to reflect on the notes. I've gone down, I've scrolled, and I've found a note on total net revenue. And so we're going to look at this note in order to see if they're just going to tell us where did that revenue go. So in this first paragraph, it starts off saying that they wound down part of their memory business called Intel Optane because of a lack of alignment with their strategic priorities. Would you just expect a business to shut down casually 20% of its of its business? You wouldn't, and that's not what happened here, because right in the same paragraph, they mentioned that this led to an inventory impairment of 723 million in cost of sales. The fact that the cost of sales is less than $1 billion, and we're looking for a missing 16 billion in revenue. They haven't said what's the impact to revenue specifically, although there definitely would be an impact to shutting down a whole part of their, like a whole business operation. But it doesn't seem like this would be the whole picture. And so at least we can say part of the 16 billion is perhaps the wind down of the Intel Optane memory business. We're still looking for billions and billions here. In the next paragraph, the three largest customers, Dell, Lenovo, and HP, more than half of all their revenue. Dell revenue is still rock solid. Instead of 43% a year earlier, it's at 42%. Lenovo, instead of 21%, it's at 19%. And HP, instead of 12%, is at 12%. Now, what's interesting is if revenue was chopped by 20% and these percentages then are affected, right? And so the actual revenue that Dell made when it was represented 43% in 2021, but that was 43% of whatever we have this year plus the missing 16 billion. This number would have been a lot higher than this number. Intel has had a missing 16 billion. I'm going to keep saying that. And Dell is still 42% of their client base. Dell, roughly, I'm fudging the numbers here quickly just to make it quick maths, but we can conservatively estimate that Dell is spending actually 15 to 20% less this year with Intel, and so is Lenovo, and so is HP. Winding back is, where does the 16 billion go? Some of it is that they wound down a Intel Optane memory business. We're not sure how much of it, but some of it, right? A couple billion perhaps. Now we're seeing that their three largest customers all spent about 20% less, but all three of them at the same time. This could be speaking to an industry shift. Intel as being certainly one of the leaders in the computer chip space, is just receiving 20% less revenue because that's how the industry is having a year. It's just a down year for the industry, and they're part of it. Certainly, their breakdown of their three largest customers is in support just because of how consistent all their customers are spending less. Now, broken down by region, we can see the exact numbers. We're looking for 16 billion, which would be roughly a missing 20%-ish. Let's just look at these numbers. China spent about 20% less. Singapore spent about 50% less. The United States actually spent about, it's not 20%, but about 15% more. Taiwan spent about 20% less, and other regions spent about 15% less. And so overall, here is the missing 16 billion. China, Singapore, Taiwan collectively all gave Intel less money. That's the story going on here. Whatever Intel is doing in, let's just call it collectively Asia, China, Singapore, and Taiwan, whatever their expenses are there, their cost of sales, their SG&A, their selling general and administrative, they didn't think at the beginning of the year or throughout the year even, at no point basically, did they think that they needed to spend less on conducting business in those regions. But by the time the year was over, all of Asia had spent about 20% in aggregate less. Why did Intel not notice that throughout the year and then react by maybe lowering their costs in the region? It could be many reasons. It could be that they had contractual agreements. Certainly with a hardware manufacturer, you can imagine that Intel might be noticing this and not being able to break contracts in order to adjust expenses. And so said differently, on January 1st, 2022, they were already committed to spending the bulk of their expenses for the whole year. You can't stop spending and breaking relationships with all of your suppliers and contractors and all this other stuff. And while this is a drop, they're still profitable. They're still this year. They're still making billions of dollars at the end of the year. Let's try to get more color on if they're explaining why. If you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. Looking at where the money that they're spending is going and where the stickiness of their expenses are, I'm finding now some notes around. Let me look up what it's called. Their network and supply chain, and there's many very fascinating things in here about how they describe their supply chain. But then they also include this graphic in order to add even more information and also summarize what it is that they're explaining. Here we can see that they have three types of supply steps. They have the wafer fobs, the assembly and test, and then the advanced packaging. Advanced packaging, they then explain, is where most of the growth of their business is expected to be coming from in the future. I mean, we're just wondering, why did revenue disappear by 20% and you spent the same amount of money? We're not talking about growth right now, right? And so putting aside the idea of growth for a second, what's most interesting are the things that already exist. And so none of the orange stuff, but the purple and blue. And they break down the purple and blue up here by the location. and how they name the different sites. Roughly speaking, almost all of the cost of sales is spent in buying things to then send to these locations. Similarly, part of the SG&A, or specifically the G&A part of SG&A, the general and administrative, is in running these locations. And so all the staff that keeps these places operating need to be going in all the time. And so at the size of Intel, the importance of Intel in the local communities, and really almost kind of like as a burden of their leading position in the world, is that Intel is so big, and just the nature of their business is so much about constant, always on manufacturing, that even if there is a quote unquote shock in terms of Asia is spending significantly less on your technology, they can't turn off a factory. Tens of thousands of workers that depend on Intel for livelihood, basically, that would be impacted by shutting down the factory. The reason Intel has a leading position is in large part because of its awesome workforce and the factories and lives that it gives its awesome workforce. That workforce would quickly turn a lot less awesome if Intel started to do things like pass the shock of revenue onto them. Some industries, what you see actually is that investors won't absorb the hit. Because that's exactly what's happening here, right? Is that if we were talking about quote unquote fairness, then if Intel's business decreases, basically Asian clients are spending 20% less, then fairness would be, yes, investors make less money, obviously, but also everyone makes less money, less bonuses, less salaries, less paid time. Everyone should, in quote unquote fairness, get 20% less of everything. That is not what Intel is in a position to do. And Intel investors should be aware that because of the natures of the details of this industry and the qualifications, how expensive it is to train workers, all that other good stuff, workers have quite a lot of clout in this industry. And if business goes down 20%, it is not the workers that are going to feel anything. In fact, workers at Intel are going to be basically insulated from knowing whether business is up or down 20%. At least that's what happened in the last year, right? It'll be on investors alone to suffer the consequences. And yes, that does mean that investors lose substantially more money this year. It also means that they get to, in general and in future years and in past years, profit as participants in an economy that involves very, very skilled workers. You're going to have investors behind you that are going to absorb that hit because basically they need you more than you need them. Only 3 of the 9 facilities listed here are in Asia. Asian countries have larger swings in their economics because they have substantially more participants, right? And so in any metric you want to think about, let's just say GDP per capita, quality of life per capita, all these things, the per capita is the big thing here, right? Is that a 1% change in Europe or North America doesn't affect the per capita part nearly as much as a 1% change in Asia. Decisions that should be thought of on a percentage basis, like let's say everyone spends 1% more, that means literally more for a business like Intel if Asian part of their business is doing 1% of anything than if other regions in their business are doing 1% of something. But to also finish up, I want to point out that everything that is an expense in this graphic in Asia, in core Asia, is blue. It's not purple. And so assembly and test seems to be particularly sticky. Very unusual that there's a whole note about managing our long-term financial model. This is Intel speaking directly to investors saying, even though it looks crazy dramatic, like how is the gross margin basically plummeting down in just a year, they're saying that this is something that isn't as surprising as it looks like at first glance. They're going to drive back to a gross margin between 51 and 53%. They're saying that even though the actual gross margins can fluctuate quite heavily, their understanding isn't fluctuating very heavily, right? And so let's back that up a bit, is that they're saying Yes, we're in a business where we could be at 40% one year and then 55, 60% another year, or in just a couple of years. But it's okay as long as we know what's happening, as long as it doesn't catch us by surprise. And their understanding of the changes is quite precise. It's only a 2% range in terms of what they think will be surprising. We're professionals and why we have these long term financial models that allow us to feel quite professional and make professional decisions. One interesting thing to note is that they end that same paragraph by saying, we expect that the previous things that they were saying will allow us to improve structural efficiencies by driving accountability and costs back to decision makers within the company. They're saying that structural efficiencies are something that they feel they need to acknowledge in a letter to investors. They're saying that no changes in Asian costs when Asian revenue decreased so much is a bit weird, and that they recognize that. They're calling that a structural efficiency level, and that an improvement to that structural efficiency would not be necessarily forcing employees to feel the burn of 20% less revenue. The correct way to think about it is a review of whether there is accountability for the costs in the decision makers within the company. And so they're not highlighting Asia specifically here, but because we have been looking at the other parts of the annual report, we know that they're almost certainly talking about decision makers for those Asian supply chain locations, right? Whoever the decision makers are for those parts of their business, they can expect to be reviewed in terms of whether they're properly being held accountable, right? And it'll be interesting because if this were the sort of industry, like, it's very telling that there was zero change. I mean, that's quite dramatic, right? And so wherever this ends up going, we shouldn't expect that it will be anywhere near that quote unquote default or kind of like perfectly fair image that we could have, in which employees and investors would equally share the burden of less revenue. From what we've been seeing so far, Intel might try to get closer to that, and that's essentially what they're saying at the final part of this paragraph here. But we wouldn't expect them to get really that close to it, because right now they're literally at all investor damage, no employee effects. Will be very difficult to predict what is going to happen there. As an investor, I would urge people to just be conservative and assume that employees, and certainly in Asia, for the foreseeable future, just not going to be impacted by reduced revenue, right? And so that would mean the costs are not really going to go down very much at all for the foreseeable future in Asia for Intel. They're specifically highlighting that they're going to try to improve that inefficiency in the economic sense, right? So employees in the Asia region, or I guess decision makers in the Asia region for Intel, might have some tense performance reviews in the upcoming year or two. The financial statements are showing us a picture of employees that are at least acting as if they don't need investors at all, and that might be true, honestly. Like, without knowing everything that there is to know about the employees that are specifically involved in these cost of sales, of which there would be thousands and thousands, it's dangerous, and it's a place where we could easily speculate on what is happening here. But in aggregate, it speaks volumes that all the Asia revenue decreased dramatically, and none of the expenses even budged a bit. Those costs are about as sticky as you can imagine right now. And management is specifically highlighting that they'll try to unsticky some of it, and they may be successful to various degrees and all this other stuff. But really, what would be better for everyone, including the employees, would be that the business starts selling again in those markets, and so that people can continue to operate how they were when there were sales just last year. Very strange situation, certainly related to lockdowns, I would be guessing. I didn't talk about that very much in the video, but when you have substantial parts of the population in that region going through forced economic decisions, maybe that's where the decision makers' heads are at. Like, they really don't want to slow down what they're doing because of something as quote unquote temporary as a lockdown. And that might be what the performance reviews uncover, is that these decision makers, for all the talk about, are they disrespecting investors or something here, which is a little bit of what the implication would be, um, that might not be it at all. Maybe they're just really in a strange situation, a situation that certainly you would hope not doesn't happen all the time. And they're making good decisions for the whole company, right? Because the company is not just the investors, is not just the employees, is not just the managers and the decision makers. It is the collection of all of them. And all these different stakeholders do ultimately work together. That's how large businesses succeed, is through the collaborative effort of all of them. And a little tension, not the worst thing in the world when they all have each other's best interests in mind. While we're digesting that, I want to take a moment to highlight some of the YouTube creators that I've enjoyed over the years. Today, I want to talk about the Geek Cupboard. So he has a lovely, is it British? He has a lovely accent, something of a type of British, I would guess. If you ever wanted to watch very relaxing, quirky video games being played without having to necessarily play it yourself, or then Geek Cupboard would certainly be a good thing to put on. Thank you, everyone. It's fun to hear about Intel. I use their products every day. Hope you enjoyed walking through this 10K with me. Maybe you learned a thing or two, or more importantly, it's just also fun. It's fun to know that people at these companies make these reports for anyone that wants to invest, including me, including you. It's kind of charming that they would go through all the trouble of justifying their big, huge corporations to me, just a person who has an internet connection. Please like and subscribe. Keep an eye on my videos. I'm trying to post over explained videos on Tuesdays. So this one will be on a Tuesday. These are more high profile public companies in which I explain a lot of the fundamentals of financial analysis while we go through it together. And then on Fridays, I'm posting kind of extreme, often more obscure or smaller companies, but that really have something pretty interesting happening with that company in particular. And so please check out both Tuesdays and Fridays. Maybe you like one style more than the other. And if you do or don't, please let me know. Please like and subscribe and share your wisdom. Blah, 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 blah.